Many people believe we have reached the pure bottom because they think Bitcoin has never broken below its previous high and has never traded lower than the peak of its prior cycle. Today, let's examine the reality behind this idea, and has this really been the case, or are we currently at the price bottom, or should we be prepared for the further declines? Hunter Hosley, the CEO of Bitwise, said that Bitcoin's drop below 70k, it's a golden opportunity for large institutions and may not happen again, meaning this chance could be lost forever. He has stated that we were in a bear market due to macroeconomic conditions, with the investors selling all kinds of assets, including Bitcoin. Despite the price decline, institutional demand remaining strong. Additionally, Google Trends data shows that when Bitcoin fell to 60k, searches for the Bitcoin reached their highest level in the past year. In addition to that, Sentiment has also reported that the word capitulation has become one of the hottest search terms on the social media. When everyone is expecting this event to happen, there is a higher probability that the market bottom forms around that point. The increase in search for the term capitulation from 11 to 58 indicates that fear in the market has risen sharply, and the fear and greed index has dropped to 7. However, personally, I believe that when we reach a true bottom, it happens where no one expects it. When everyone is hopeless and no one is even thinking about the capitulation, and everyone is instead looking for much lower price levels. Similar to the previous cycle, when we reached 15k, many people were saying we would drop to 9 to 10k and fill the CME gap at that level. But we never reached that point. We are still not there yet. Many people are still thinking positively and believe that the price bottom is here. Alright, let's move to the chart. If we carefully draw a line over the high of the previous two cycles, I mean the 2018, we see that they were around 20k, like that. We are around 20k. However, the bottom of the 2021 cycle was around 15k, which is about 23.62% below the high of the previous cycle. If we are draw this 2021 cycle high, I did that before, and apply 23.62% drawdown, we arrive at the 50. We can see that our bottom at approximately 52k, like that. Also similar to the 2021, we are currently inside a bearish wedge pattern similar to the 2021. A rejection at that upper trend line, you can see here. By the first leg down, first time when we touched the trend line, we are rejected, and we drop down and formed a bearish flag, and then hit again that trend line, and forming a second leg down, were positioned at almost the exact same point in the cycle as the previous ones. You can see first time when we hit the trend line, we are rejected, and second times we formed a bearish flag and rejected again from that trend line. If I overlay the candlestick pattern of the previous cycle, I did that. I mean, here, this one, I add that candlestick pattern to our live chart. Measure the time distance from the second leg of the declines to where the cycle bottom formed. You will see that it took 196 days. Last cycle, you see 196 days after that. After the second leg down, we hit the bottom. Now, if we project those 196 days onto the live chart and apply the same candlestick pattern, it points to price range of roughly 52 to 48k, and it's timing around early September, very close to October. If we also apply a Fibonacci retracement under the chart, you can see clearly our bottom formed at 0.786 Fibonacci. If I do that again in this cycle, you can see we are close to 0.786 Fibonacci. Same time, at the same Fibo level. Fractal and time-based patterns together with the Fibonacci align beautifully to indicate a potential bottom. And if we watch the last night's video, even the on-chain data is aligned with this scenario. If you enjoyed this video, make sure to like this and subscribe to the channel. Peace out.